So I'm gonna make a couple of people co-hosts really quickly. That way, if anybody's wanting to come into the chats, feel free to just let them in, please. So majorly gonna go over a year, nice. Go ahead and drop in the chats how long you've been trading, and how long you've been with the family as well. Are you guys able to see my screen too? 2 years, VKJ, my brother, what's going on, bro? VKJ, my brother, I love to see it. 2 days, Janae, two days, 2 weeks. So we got it over a year, 2 years, 2 days, and 2 weeks, right? Awesome. This is a perfect call, right? I'm gonna go right down to the basics. Really show you guys the how pretty much steady works, right? So what I was referring to when I was speaking about steady, for those of you guys that are brand new, I'm gonna go on a platform just so you guys can see it yourselves. All right, go live. Go live.im. And as soon as you're on there, if you have the study on, if you're now looking to understand the strategy with Forex and kind of just more so trade how the educators are moving about it, you can gain a lot of knowledge by coming on the Go Live platform, scrolling down, making sure you're in English, and you click here on study, right? I'm just showing you in advance so you can know exactly where to refer back to. So when you come on study here, they're all great educators. But a guy that I really love to follow right now, and I've been following for a good 2 years now, that's been allowing a lot of individuals to have success, is John Dollery, right? So John Dollery on this session, right, you're going to have some recorded sessions really personalized and really given down with notes, right? So you want to go recorded sessions, right? Go on our favorite sessions. You're going to see lesson 1 to about 13, right? I want you guys to go through each and every session, literally. So right here, as you see it here, you're going to see lesson 1, lesson 2, lesson 3. Make sure it's all 2021 lessons, right? And you want to go through this. Yes, he has an older version that goes up to lesson 8, but now he's gone ahead and extended and made a really more clear approach. Really, everything is noted, guys. So I'm really how I see it. Watch it once. Take notes with it and apply what you're doing also at the same time. After each video, apply. And that's how I'm going to be able to really just transition and show you guys exactly what I want to show you, right? This is going to be very valuable. If you've been here for a minute, this is going to be a good reminder as well to what you already know already, right? So I'm going to go before going even into the charts. I'm actually going to do it from the charts because I want everybody to see this, right? So I'm gonna go on a random chart here. We're currently on USD CAD, but I'm gonna go on USD CAD on a kind of different chart as well. USD CAD, different chart. Let's say an O under, right? So as I'm on USD CAD right now, I'm gonna go ahead and delete everything. I want you guys to help me notice that there's in the market, as in a weekly perspective, you guys are seeing ways that happen in the market. Normally market moves in 3 ways. If you want to already aware, market goes up, down, sideways. Right? That's the most important thing to know. Right? If you want to know how it moves, it goes up, it goes down, or it goes sideways at times. Right? Whether it's on the high end of the market or whether it's on the low end of the market. Market will often move in those 3 manners. Right? Now that you're on it, I want you to notice that as this market is moving, right, it's creating series of what we call M's and W's, right? So over here, market, let's say we just go from right here. I'm gonna go in the past, like this repeats itself all the time. So right here, we're seeing a series of M's. Let me see if I can draw it here with you guys so you guys can actually see it clearly. So I'm seeing a series of W's happening right here in the marketplace. And at the same time, I'm kind of seeing M's also happen. M is happening, the W patterns happening over and over again. And that's a big W, right? And, if I go ahead and erase this really quickly, on the top side right here, you guys can also notice that there's an M happening in the market. I want you guys to get familiar to identifying these M's and W's, right? Because, it's good to be aware of them and be aware of what's going on within these M's and W's, because these M's and W's can really allow you to really identify a lot of things that's happening constantly in the marketplace. So here we see the M, here again, W's, while still creating an M, Market is constantly moving sideways, right? I'll break down in a few minutes why it's good to understand which one is M, which one is the W, and how to really take advantage of this, right? Notice it happens all the time. Now, a lot of people, when you start trading, we show us the basics of these M's and W's, and I want you guys to notice what happens all the time. Right? If you go on the internet, you look for basic patterns, right? These are the basic patterns that are repeated all the time in the market. Why is it important to understand these basic patterns? Because these basic patterns allow you to know when to precisely get in and how to make sure you're getting in with the institutions and not just getting in according to what the internet says, right? So I'm gonna switch back to the internet really quickly and go on Google right here. I want to show you this pattern because I need you guys to see what I'm about to show you, right? I want you guys to notice this. I'm gonna go to Forex Patterns, right? So as I go in Forex Patterns, I want you to notice what we see right away in the images, right? You get to see right here, pretty much reversal patterns that happen all the time in the market. One here is the double top, otherwise known as the M. Another one, and here also we have the double bottom, otherwise known as the W. Now, the reason I'm showing you this is it has a general target on it. So me, myself, when I first started trading and first off, right? And a lot of us, it happened to pretty much a lot of us as well, right? What would happen now is that, we see these W's and M's, right? When you see an M generally, which is a double top, what do they tell us to do? They give us an entry right here at the neckline, and our stop loss, the general people's stop loss, everyone in the world is generally right here or right up top, right? Given that case, right, that the average person just puts their stop loss right there, 20 pips, or they put it even higher, and we have this as a target. They see that this happens every time that we have this pattern happen. This is exactly what is going to happen. And I want to be quite frank. It does happen in the marketplace, but it does not happen instantly, right? It does not happen instantly. And I'm sure a lot of people on the call right now can agree that, you've also gone ahead and seen the M, right? And said, okay, I'm going to go ahead and enter at this neckline, right? And just like myself, you entered, right? And you went into profit a little bit, saw some pips, saw some points moving the market. But what ended up happening again is that the market came right back and hit the stop. And then we would get back in, right? Not wanting to lose because we understand we see an M, the M is to sell, right? But now we enter for one last time, we get them a final stop loss. We give up on the idea of that direction because the market is playing that psychological play on ourselves, right? Because they created these patterns. So it hits their stop loss and then goes the way, finally, when we don't enter. How many of you guys on this call that it's happened to before? Drop a 777 in the chat box if that has happened to you as well. All right. Drop a 777 if this going to catch the M and finally, okay, goes and hits your stop a few times, then it goes the way. The same thing on the W side, right? It show you the W formation, neckline, entry there, stop loss right there. It'll hit your stop 1-2 times, then you're like, oh, I want to go in and cash out on this. And then it hits your stop one last and goes the right direction. This happened to me so much, right? I have to realize that this cannot be the exact way. It makes sense when you're on a higher time frame perspective, right? But this is not the way to necessarily go about it, right? Now you need to understand, okay, there's people that created this. Who are these individuals, right? So by understanding who they are, you can now operate like these individuals, right? We already know over 90, pretty much 94% of people that participate in the market lose in the market, right? And I'm not saying this to scare anybody. You guys should already know this if you're on this call, right? But it's just to have you understand that if 96% of people are losing and we're part of the 4% that can come on and be on a winning category, what can we do to make sure that we're operating like they're operating? Now that's where you're gonna go ahead and go on Google once again. You can see who's really who's been running the markets, right? So I'm gonna go right here. I'm gonna write top 10 currency traders, right? You guys all have access to the same information. So top 10 currency traders, if I go on Wikipedia right here, you guys can see it. And they run the most volume that goes in and out of the market. They run the most volume that goes in and out of the market. And they've been out here for decades and decades. They've been running the market since before I was even born. So given that case, they must be doing something to confuse the rest of the world. And that they really put out these patterns, these M's and W patterns I was showing you right here. They put these different rising wedge, falling wedge, and these patterns are valid. You will see these patterns in the market. Now is understanding using these patterns to your advantage once you spot it, right? That's really understanding. Once you see them, okay, you know something nice is about to happen for you. You just got to make sure you're entering as an institution as opposed to a full-on retail trading just patterns, right? Retail traders, right? And we most of us fall into the category of retails, right? But once you understand how to move like institutions, trading with Wyckoff and smart money concepts, you can now really move forward and up, right? So now I've shown you this, right? You guys understand the top 10 currency traders, JP Morgan, UBS, all these individuals, they run the highest volume, right? What I'm showing you is this now. I want to show you the representation of really what's happening every time. They show you M's and W's in the marketplace, right? And I'm gonna try to find these real representations on the chart as well. So over here, literally, what I want you guys to notice literally what happens all the time. So I'm gonna form an M right here. I'm gonna actually W first. We'll start off with a W. So now I want you guys to notice what's going to happen within this W right here. That's going on, right? So generally within this W, right? Generally they tell us, buy the neckline, which is pretty much the neckline is like right here, right? Most of the time that's where the neckline's at. Stretch it, right? So neckline's right here, so you're buying the neckline. But I want you to know what really happens, right? So we saw a double bottom. Double bottom is pretty much where we're looking to see a double bottom and buy, like we're seeing in this pattern, right? Which represents a W. Now, going back to this, I want you to know that, underneath this W that you see, right, there's multiple people that have a stop loss right here and a stop loss right here, right? If you don't know what's a stop just means, that's where you want to make sure you're protecting your profits. You're risking 1% to obtain 3% or more. For example, if you're even using this tool on TradingView, long or short position, long is to buy, short is to sell. In the long position, you can now use this to kind of pretty much picture where your stop loss is at in the market. Now, most people they'll enter at the neckline. I'm going to use this to give you guys a clear representation of what I want to show you guys as well, right? So most people they enter at the neckline right here, right? Entering there, which is phenomenal, which is good. That's what the internet shows us to do, right? They'll have about a 20 pip stop, 20 point stop from the market from where they entered, right? And they want to take this for a good, 3 to 1, 3 to 1, 5 to 1. That would be the ideal thing, right? Now, would that necessarily always happen? Not necessarily. Some people even say, I want to make sure it does not. They know it hits their stop loss a lot. They'll say, I don't even want it to, get near my stop loss. Let me put it right below the lows, right? This is where we have these two. And they'll aim for a 3 to 1. Some people even aim for a 1 to 1. I'm just showing you the proper way of doing this, aiming for a 3 to 1. If you're going to use this, aim for your 3 to 1, right? Now seeing this, so you have one trade going for about a 3 to 1 here. Right, 3 to 1. If you don't have an understanding of what that is, this is just risk to reward, right? You can see the risk reward is right here. If I click on this one, you see 3, right? So that means we're risking 1 for 3, or either best example I can put it, you're risking 1 apple to obtain 3 apples, or 1 apple to obtain 5. We're putting the most chances on our side for us to win. So that way, if we lose, we can lose multiple times, gain 1 or 2 wins, and be ahead, no matter how many losses we actually really took. Right. So that's more so how I broke down risk reward. So now seeing these W right here. Now understanding that most people enter here, don't even put a stop loss here. I want you to know what happens all the time in the market. And it's very important to notice this, right? So under the stop loss, there's other things there. There's pending orders, right? Pending orders, and these pending orders, like that's your sell limit, your buy limits. It could either be also mainly, you know, in this situation of a W, it's self stops, right? So your self stop is going to be right here. Your self stop is going to be right under your stop loss most of the time, right? A few pips below. Right? You can even see that as a representation of money sitting here, right? Those buy stops is just money, right? So now institutions, what did they decide to do? They literally decide to, okay, great. We know here, this is, I want you guys to notice this. This is what you're going to be learning in John Dollar is going to show you this being what now? This is kind of an equal low, right? Equal low. Equal lows. And seeing this equal low here, I'm going to search this off, put a center for you guys. All right, this equal low that's on this W pattern, right? You want to make sure this happens first, right? When this happens, you can now say, you know what, I know what I'm gonna do. I know how I'm gonna be able to get an entry to go ahead and execute. Oftentimes, you need to make sure you see market come and do this. Market will oftentimes go ahead and what? Search and destroy what's below, which is what? The stop loss. So that's why it gets us mad a few times, right? Once, then goes a direction. It'll do like once, go a direction, right? Then come back down into the zone, hits the stop loss again, because we finally decide to enter, right? It goes a direction. It might just hit us one last time and then actually go where we want it to go. But I want you to know the best way to really identify seeing this. You see equal lows? Wait for this to happen. Wait for it to come and reach for the stops. Take out the stops that are here and potentially even activate the sell stops, right? Because these are going to be the long wicks that'll come in like this, right? Then you're going to be seeing market coming in slowly and trying to go back up. It literally happens almost exactly how I'm representing it, right? And then you're like all hyped up. Now you're buying again, what? At the neckline. Because remember, this is just another W, right? Now you're buying at the neckline again of that same zone, right? And it'll go up in a direction. But I never want you to feel like you're missing out, because the market will always come back and give you a test back at the spot and go. Now, this is where I'll tie it into a basic structure, right? I'll tie this into basic structure. Now, when we're buying, what do we want to look for? For those of you guys that understand so far, and that if this makes sense, when we're buying, we're looking for something to happen. When you want to buy, you want to look for higher lows to happen in the market, right? How many of you guys understand in the chat box right now that you got to buy from a higher low? Don't just say you understand. Type in a 111 in the chat if that makes sense, right? If it doesn't make sense, let me know. Don't make sense. I'll help it make sense. I'll explain it a little different, right? But yeah, thank you, right? This is literally crazy, guys, right? This is really, really crazy. And I really want you guys to understand, once again, I want to just draw it up for you guys, right? Market came in, cleared out the lows, activated these. I put here, these are stop losses that are below the W, right? Stop losses. And this represents what? This represents the sell stops that are below, which are pending orders. Our stop loss is a pending order to take us out of the market once it reaches that zone to protect our capital, right? The market sees all this. That's why they created these patterns. And now it gets cleared to low, moves in the direction, comes back in by what's happening here. In an uptrending market, when the market breaks structure, right, and starts trending up, we're looking for higher lows to enter into the marketplace. So automatically, you should be seeing higher lows. Higher lows or higher highs. Duplicate this. There's a higher high. I don't know if you guys can see this. Is it too small? Oh, whoa, excuse me. So right here, the whole thing is happening again. It's going to come back in, create a new higher low, and still keep going the direction it needs to go. That's literally what happens all the time, guys. I'm not even joking. This is literally what happens all the time. Happens all the time. If I flip this in reverse, that's something that's going to happen for the M's as well, right? I'm going to do the example of the M's. If you guys want to take a screenshot of this, you can. But this is literally the representation of how you want to see it in the market. No matter the time frame, you could be on a 4 hour, 1 hour, 2 hours. You're going to see this happen. So I'm gonna do the M really quickly, right? So just so you guys can catch the M's and see how the M's are done. All right, we'll go ahead and remove all of this. Delete. So now the same way, right? Instead of a W, I'm gonna go for the M now. Same thing. Whoa, that deleted quick. Alrighty, M's right there. You don't need to be artsy to be good in trading. So right here, right? So we got an M, right? Same thing, right? Once again, right? Remember this M, what do they show us here in the Forex Patterns on Google, right? Don't always trust what's on the internet, guys, right? Now we're gonna go for the double top. So your double top represents your M, right? So your double top representing your M, this is not how you want to be looking at it. This, how you want to be looking at it is exactly how I'm gonna represent it right now, right? So double top representing your M, what's right above of it? Stop loss. What's right above of it? Stop loss, right? And over here, we have pretty much the neckline. Yo, market goes a little bit. You guys are starting to make sense, right? So right above of this, once again, what do you have there? You have those what? Pending orders, which is otherwise known as your buy stops, right? Because if it breaks that buy stop, it's gonna activate, it's gonna go away. The same way as someone could have a sell limit here, and what little did they know, there's a lot of stop losses right above. So market is gonna go hunt, what? Seek and destroy those zones, right? Market is what? Gonna what? Seek and destroy. Literally gonna seek and destroy those zones. It may not happen right away. Market may just do this. Market may decide to go sideways a little bit here and pop in. Stop losses are hit right there. Come back in and keep going to activate. It may just be a wick that comes in and activates those buy stops. And let's remember that market likes to provide the max pain to people, right? Buy stops get activated. Now those buy stops, they got to fight for their life. You see the market's going to go up in an uptrend now, or it could just decide to come back down. But if your market was trending down, you should be able to identify a lot of M's. If your market is trending down, you want to see a lot of M's happen for yourselves, right? And if the market was trending up, right, you want to see a lot of W's happen to give you the opportunity to go up, how we just labeled it just earlier. So now looking at this, right, I'm going to pause right here, right? Market's now activated in my zone, right? It now hit the stop loss here and here, right? What generally happens next is the market is now going to start pulling to the direction we want. It may just happen really fast. I don't want you to ever feel like, okay, I've absolutely done it. You know, I'm like, the trade is gone. Like, I don't want you to FOMO. That's what I mean. I don't want you to FOMO and have the fear of missing out, right? FOMO is pretty much short for fear of missing out. Don't have FOMO. Let the market come back to you. Remember here again, once again, what was this? This was the neckline break, right? This was the neckline break. So remember what the market does on a low level here. It'll come back and do it again. Most of the times. And remember, when we're selling in a structure, we want to make sure we're selling from a lower high standpoint, right? In the buying, we talked about higher lows and higher highs. Now, in the selling, you want to look for lower lows and lower highs to get in from and capitalize from the sell down, right? And we see something's gonna happen here, right? So market drop down, right? Now following this, market will come right back up. Don't get fooled by the neckline. Don't try to enter. Like, remember, the neckline is just to fool you. Make sure you've seen a big candle come in, clear the market, or a nice wick come in and clear the market. Like here, this wick here cleared out this market that was here, and went to tap into these stop losses, right? And right here, this came in to tap into those buy stops, and then dropped. Now market is coming back in. If it's just at the neckline, just best believe that's not where you want to get in at, right? At times, yes, it could if it breaks the structure, but that's another topic, right? Breaking structures, otherwise known as, let me just pause it right here. Market showing you a different sense of a zone. Is breaking this area, is knocked out a previous higher low, and now it's going to form pretty much a new lower low, right? That's how you want to pretty much know in the downtrend you've pretty much broken structure. Now going back to it, market will just pull back generally, let you enter back in the last up candle before the down move, right? And now just head into the direction you pretty much intended. You start creating waves, right? It's not gonna be perfect like this, but it's more so in that direction. Oh, did I just erase? Oh my God, wow, that's amazing. All right, markets most of the time is gonna create now lower lows, lower highs, lower lows, lower highs all the time for you guys. I want to make sure that makes sense. Does that make sense to everybody? Go ahead and drop a quick MS in the chat box. I want to make sure that makes sense to everybody, because this is just the basic structure. Like understanding this, you can use this on any strategy, guys. Any strategy. It's not even a joke. Any strategy, you guys will be very, very more so very profitable. All highs. Like, it's not even a joke, guys. It's really not a joke. Market will do this all the time. Lower high. Now that failed to create a new lower low. Lower high. Lower low here created a new low. Lower high. Now lower low, new low created. That's how you want to follow. And every time you want to enter for a sell, don't just enter when it breaks out. Just let it come back to you. Sometimes it will, sometimes it won't. Better you miss out than over risk and have poor risk to reward. Remember, now on a short position side, look what we did earlier, right? The average person says, let's just enter, let's do what the internet tells us to do, right? Which is this, right? Which is this right here. Entry's there, stop is there. But what's a guarantee that it's really gonna go right away? There's no real guarantee, right? Market has a mind of its own, right? So here once again, now we'll go ahead and drop it to the floor. Most people go for 3 to 1, 3 to 1. Looks like this. Everyone has about a 20 pip stop. 20 pip stop. And you see, like, that's what I'm saying. It does work. But most of the times you get played, right? So somebody else is going to say, you know what, let me enter from the neckline. Yes. I want to separate these so you can get a good representation. Okay, good. Most people say, let me enter at the neckline, but, you know, my stop loss, I'm going to put it way up here because, you know, I'm wild, you know? I don't want to let it touch my stop loss. But I want you to notice what happens when you do that, right? What happens when you do that is now you now have a one-to-one risk reward trade, which means now you're risking one apple for one apple. Now, does that make sense to you? I'm pretty sure now it doesn't, right? You want to be in a position where you're always risking one apple for 3 or one apple for 5. So now in this case, for you to be able to gain 5, for you to have one apple for 5, you'd have to have a target that gets you pretty much at least a 3 to 1 or 5 to 1. So if let me adjust this for y'all. So you guys see this, 5 to 1, right? You're risking one apple for 5. If not here, you're risking one apple for 3. So I want you guys to notice what happens here most of the times. People will decide to enter, participate in the market, right? Most people decide to participate in the marketplace, right? What happens? Stop loss gets hit. It goes into the direction. Now they're happy. They're built salty. They'll get back in, right? Market will do them again the same thing. They'll get into some profits. They might not even break even because they're like, oh, I'm sure it's gonna go my way, right? It's an M pattern, right? And then it goes right up, clears out the liquidity, right? Which is the stop losses, which is the pending orders, the pending money that's sitting above there, however you want to see it put, right? And then starts forming new ways of M's now, which forms into lower highs, and now starts trending to the direction it needs to trend into, right? And now to tie it all into one, right? Tie it all into one. So someone said, if you set a pending order, would you hold it till the break of structure? If I set a pending order, it's simply because I already had all the confirmations to know that, it's hit. Example, is already cleared out a high, and now I'm waiting for a test, right? Now that's a whole other class, brother. But if you want to refer to that, you can refer to a last video I made with Jason, that's on my channel, Forex Secrets. That goes more in depth to show you exactly how you can go ahead and go get those entries, right? That are within right there as a test, or example, this breaks out, comes back and tests. It shows you how to go get those entries now. This is more so just how to structure yourself so you know exactly, what? When the market does that, I need to wait for a test to come in, right? If I go on a chart that I'm doing right now, like I'm marked up, I can easily show you that on the chart I marked up. Let's go on example USD CAD. As far as entries go, I'm gonna find one here. Great. USD CAD. So on USD CAD here, current marketplace is pretty much above at this level. But I look left to get right. I'm seeing equal lows that are really pretty much sitting here, right? So I want market to come in, right, and hit a point of interest, right? Point of interest meaning an area where, market has done what? Market has come in, cleared the liquidity. So remember we were talking about M's and W's, right? So what the market did here? Market did this. And now here, this right here cleared liquidity, right? This is already a series of M's and W's. And now this has gone up. It's done its way about the playing field. But market has to come back and balance itself at some point. We never know exactly when it does. But thanks to the strategies we follow on a steady platform and using the Wyckoff strategy as a whole, right? That I kind of been teaching over time within the Wealth Empire family, right? You can now come and get entries within previous down candle before the up move, which clears this liquidity, right? Clearing equal lows, clears out the money, clears out the pending orders, and then gives us a test on the last down candle before the up move when you're buying. But when you're selling, I want you guys to notice here, when you're actually selling, what happened most of the time is price is going to come give you a test on the last up candle before the down move. So if you look here, right, if this had been, right, for this sell, if this had been the previous last up candle, right, before the down move, you would want market to come and test either 50% of this, either the opening of this candle. Why this candle? Because this candle cleared a significant liquidity that was on the left of it. If it didn't clear liquidity, right, or take out pending orders or take out money that was sitting there, it cannot be considered to be an institutional candle or a sponsorship candle, as some would call it, right? So if I go right into this, right, and I pick my short position here, I have the possibility to enter and have put my stop loss right above the high, right? I have the choice of doing that. Or now, once again, taking it from the 50%. 50% meaning half of the candle body, and this right above this high. Now, in doing so, I now know where I want to get in at. if you look at this, right, I got stopped out on the market. But this is on a 2-hour. I could have tried to play this move multiple times on the lower time frame, right? And I even want to let you guys know, even if you miss moves like this, right? Even if you miss moves like this, market always gives you the opportunity to enter off of the wick. So if example of this candle had a wick, you can now go ahead and enter off of this. And you can see how, let me zoom in here. I want everybody to be able to see this. You can see how the market really plays. I need to plug in my laptop. Ooh, you can see how the market really plays games over here, right? And we're so precise that we can get these kind of entries. We can get a low risk, high reward with this strategy by developing understanding, by learning from those that have what you want, by learning by different educators, by learning by plugging into the basic calls that happen, the product trains that happen within the family, right? And just to help yourself elevate and grow. Simple as that. Now taking this would be like beautiful, really beautiful trade, amazing risk reward, but this did not play out. This played out on a lower time frame, right? So that's just to show you a quick example of how you want to go about getting your entries. So I'm not gonna really tap into that on this, but feel free to tap into my YouTube channel, Forex Secrets, or just first and foremost, go ahead and watch on Go Live, the man himself, John Dollery. And this is where I learned the information once again, right? This is where I learned a lot of the information that I was able to share with you on a basic level. And he teaches about market cycles, structure, and breakage structure, right? I want to give it right back because this is where the information is tied into. I just kind of gave you, I pretty much gave you lesson 2 and lesson 3 in one, and a bit of lesson 4, right? Because that's really a jump start. But you're gonna be able to have the notes directly they can write down directly on there, right? So I definitely believe everyone should refer back to this, right? Now about going ahead, whenever you see me drop charts in the trade rooms or anything like that, most of my charts are going to be based off of what I see that the market is doing and the strategy, right? To tie it on, I want to go bring this image to your attention. If you don't have this image somewhere saved on your computer, on the screen of your phone, or printed out, you definitely should have it. Because once you see this all the time, this is what you will always see, right? So you want to look for this, Wyckoff. Wyckoff is the grandfather of the strategy. This is what we do. This is how we operate like the institutions. This allows you to give sense and awareness to your M's and W's, right? To tie it all in, whenever you're going to be seeing the market move in, remember we said the market moves in 3 ways: up, down, sideways, correct? So when the market is going to be moving sideways, whenever it's going to be at a low point, you're going to know that we are in a Wyckoff accumulation, which is otherwise known as consolidation for most people. That's how you guys know it as. But how we're supposed to call it is an accumulation happening in the market, right? When it's at a low point. But now when it's at a high point of the marketplace, guys, I want you to note this being a distribution. Distribution causing what? M's and W's, which is confusion, right? You see the test I'm talking about themselves. Don't worry too much about identifying, what's a spring, climax. That'll come with time. But the basic thing you gotta understand, when we're at a low point, we identify an accumulation. When we're at a high point, we identify a distribution, right? And that's pretty much it for today. I want to really wrap it up with that. If you guys have questions, feel free to drop them in the chat. And that's what I want to really end it on, and really show you guys a basic view on how you can really understand and read the charts. Now, don't just watch this. Go back on your charts. Go back on TradingView. Try to find those accumulations and distributions. Save the Wyckoff to your background, right? Do what's necessary for your own growth as it is, right? That's what I really believe that everyone should get to. On a Wyckoff, you guys can see there's always, if you want a distribution on the lower scale, look at it right here, the schematic, detailed, and also the schematic for an accumulation. Notice this is like uptrend, and what is this? This is like we're downtrending. Print these out, guys. Trust me, it'll make sense once you do it, right? It would really, really make sense once you do it.